trust your crypto assets to centralized exchanges that actively sell your private information and front-run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low-liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.
Hello. Man, this one is good. I got a new thing of flavors. Woo. I just want to drink coffee all day, just with flavors. It's like a freaking dessert. This one is like a vanilla something. The whole thing, every one of the flavors in there was like a super delicious flavor, like chocolatey happiness, marshmallow, the caramel, fucking diabetic coma, like all the good flavors. So happy. All right, we'll get to it. Hello. I hope everybody made the best. Let me ask this. Yeah, man, this is a big. Oh yeah, it's a production company, but yeah, it might as well be, right? Yeah, it's big. I want to show of hands, or let me know who here took advantage of the sell-off. So when you saw the sell-off revert a few days ago, starting kind of late Saturday, Sunday, when you saw everything S the bed, how many people here won? Okay, how many people participated? Meaning you did something positive during that dip. You didn't lose faith, or maybe you might have been scared or whatever, but you didn't let it beat you up. Because I had phone calls. I think we talked about it yesterday. I had phone calls of people. It was more than one, but it wasn't 4. Usually 4 is where I think there's some real panic setting in, some really, essing your pants panic. But I had 2 calls where the people were like, "Is this it? Is it over?" When is it over? Is what over? Just started. Anyway, I'm curious to see who participated. It was a nice little 2 or 3 days. The more veteran you guys become, the more you will beg for these kinds of sell-offs. When people want to take on leverage, I welcome it. Go leverage all your shit. Go. Lean it all out. Go. Invest, punt into every stupid ass thing with as much leverage as possible. Go over to Binance and get 120x leverage. Go over to Bitfinex and get 100x leverage. Do the stupidest shit you can possibly, concoct in your brain, in your investment rat brain. Do it, because it gives us these opportunities, and it's easy to farm these kind of opportunities. Let me go over to something. These kind of opportunities are real easy to farm in up markets. I mean, really easy. But you have to kind of have the the cojones to pull the trigger. And you need to do it within position, within limits, within your portfolio and things like that. You don't want to throw good money after bad, and you need to be able to read the tea leaves. Remember, you guys are just competing with who? A bunch of, let's be honest, intellectually mostly weak people. Hopium field, YOLO, meme coin peddling douchebags. That's it. You're not competing with geniuses. You're not competing with financial, stalwarts. It's not you and Jeffrey Gunlock going head to head in some kind of cognitive struggle. That's not it. So good. You participated. Good. Who here? There'll be some of you, and it's okay. Who here had some borderline panic and they thought, is the bull market over? It went for 33 days, and I guess that's all we get. We get 33 days of bull market and back to another 2 years of bear market. Who thought maybe it was over? I'm curious. And again, this is from the first question. Oh, you went through Deribit. Okay, good, Robert. Be careful with Deribit because you can accidentally take on leverage and not know it. So be very careful. Look, watch your, don't fat thumb anything and don't misdecimalize because they'll give you leverage and then they'll wipe you out. I know I watched a client get wiped for a Bitcoin that they pretty much stole from him because they just moved the tape and liquidated a bunch of people, and it looked very suspicious. And anyway, so just be very careful with Deribit. Don't accidentally extend leverage into your account. Good. Detroit. Good. Not me, Sam. You said all this. Well, Sam, you're already above your all-time high. And by the way, you guys know you can only be at your all-time high. You can be above a prior all-time high, but your all-time high is your all-time high. You can only be that high. Now that you can move that yardstick up into infinity, but that's your high. But that's all right, Sam. I like this. I like this intellectual battle you got going. Good. Oh, good, Lisa. Interesting. Good. Stop it with your phone calls. All right. Good. Stood pat. All right. I didn't sell. Okay, good. Yeah, no one should be selling. Oh, Frank, if you can tell me, I'm curious, Frank, where you bought Optimism. Polar, where did you buy Optimism? Not what location, at around what range. Don't tell me how much you bought. Just let me know. You got order limits filled at Optimism, Filecoin, bought more. Okay, good. I had limit orders in to purchase, and I talked about this a little bit behind the wall, but I'm only going to say this just because it's a past tense thing. It's not obviously advice. You guys do you. So what I did is I had limit orders floating out there. When it first started crashing Sunday, I was like, this is I think all of us had known for about a week and a half to 2 weeks that people were taking on too much leverage. There was too much borrowed money and there were too many dummies punting into crypto. That seemed pretty obvious. So you knew that leverage had to unwind. And this is what happens is people take on more and more leverage and more leverage. And at some point it's got to correct. And these are technical corrections that are very healthy for the market. So I had limit orders for Fetch, Aptos, Optimism, Jupiter. The only one that didn't fill, and I missed it by 6 cents, which is a lot, actually. It's like I missed it by at that point it would be 7 or 8%, but was the Jupiter. I didn't fill my Jupiter trade, but I didn't have as much conviction with that one. I probably could have. It would have been the best performer out of this bunch because of its rebound. But that's neither here nor there. No crying over spilt milk. I've got creamy milk inside my coffee. But I did get filled on the others, and the recovery was a little bit quicker than I thought. And so I already, I haven't even posted it to the digital private clients yet, but I already got out of one of them. But just so you guys know, when I do these little trades, it's not with my investment stash. If I have an investment asset, I don't touch it. This is just free cash that I might have mined from other assets when they hit 10x take 20, 2x take 10, that kind of thing. Well, I had a little pile of cash for just those kinds of little trading maneuvers, but I keep the profit on any of these trades. I keep the profit in the token. So let's say I spent $1,000 on something and it went up, whatever percent. Let's say it went up 100%. It didn't, but let's say it did. It went to $2,000. I don't go sell all that. I sell my original $1,000 worth back to get my original cash back off the investment, and I leave the tokens, and I use that to slowly build my stash. I don't trade all the time. I trade when there are dips that don't make sense. I trade when things move too far, too fast, things like that. But again, this is not with my investment stuff. If you have investment assets, you are leaving them there because you believe from a year to 18 months, 36 months out, you're going to have a substantial material gain that could be, a 10x or something like that. I think an investment is something that you think could do a 10x, which in traditional finance, you would get laughed out of every fucking boardroom ever. If you told someone, this is why you have to be careful with how you wield your words in crypto. If you told someone, oh, okay, I believe these assets can do a 10x, people would mostly laugh at you. But you know what? People mostly laughed at Michael Saylor's dumb Ponzi scheme running psycho, crypto bro ass in 2020. And he did almost a 21x on MicroStrategy, the Ponzi scheme that's MicroStrategy. He's done a 21x on that. And I would say at this point, everyone knows it's a Ponzi scheme. Like everyone. We did a whole show on it Tuesday, right? Like it's a very obvious volatility mining Ponzi scheme prejudiced towards senior note holders. Cool. If dumbasses are willing to buy it or not do the research and buy it, and they want to support that musical chairs, off Broadway number that Michael's pulling, more power to him. Good for him. And I mean, I guess for now, good for Bitcoin. But anyway, what we're going to talk about today, why I'm kind of asking you guys this, why we're going to talk today about making the best out of both bear markets and pullbacks, and some of the intellectual skills that will, again, game theory, cognitive bias based skills that will put you ahead of your peers, and your peers are really not paying attention. So it's pretty easy to win. It's pretty easy to win consistently. Remember that you really only have to make slightly better decisions on a routine basis to end up way, way above your peers. And in this case, our peers are other people that are investing. Hell yeah, just keep that in mind. Anyway, bought, good. Preset limit order naps and bargains, good. Sat on my hands. For those of you that didn't make a move, what were some of the things going through your mind? For those of you that were like, I don't know. What were some of the things that you were thinking of? Were you thinking it was over? Were you thinking, do I see the chat on this board? I see the chat on this board, David. What I see is all the chats aggregated into StreamYard. I see it all. I am omnipresent. The sell-off was a Christmas gift. We might get one more. It's the 12th. 10 days? 10 days? We might get another one. We might get another pullback. Good. Bought more op. Yeah. I think that's going to be a great play. I just don't know when other people are going to think it's a great play. We'll see. No borderline panic. You sleep well at night. That's the key, Dave. As long as you can sleep, you're good. I've been here for a minute. Yeah, that's good. It's hard not to. You see what I'm saying? You have to be careful. You can accidentally use leverage and not even know it on Deribit. You got to be really careful. I hope. One of my hopes, we're going to talk here in a second about the Bitwise CEO. He made some predictions for 2025, which I think are pretty much in line with reality. I think some kind of, I don't want to say leverage markets, but I think options markets against physical Bitcoin and physical Ethereum, I feel like that's coming That's coming in 2025 here in the United States. Now, if you're outside the United States, more power to you. I was trying to open a Deribit account. I had a Deribit account through my French documents. For those of you who don't know, I was in the French military, and I got French documents. But it was real sketchy because I was using an American account to fund the French. It was like, I better not do this, because I heard that they can just freeze your assets. They weren't doing that a few years ago, but they are doing that now, because the U.S. is a kick in the dick as far as anything regulatory, or at least it was until 38 days ago or whatever. So I think 2025, 6, 7, 8, I think moving forward, the regulatory environment is going to be really good. There's going to be a lot of opportunity, and it won't be on day one, but there could be by the middle to the third quarter of 2025, there could be very nice, fully formed, quite liquid derivatives markets for physical Bitcoin and physical Ethereum. I would be shocked if Coinbase is not angling in that direction. They would love to have derivative exposure, because that's how Binance and Bybit, some of these other exchanges, they make a lot of money off these derivative trading markets and these kind of, I don't know what synthetic markets. I don't know. They're kind of, but yeah, derivatives markets against these crypto assets. Go slow, steady and slow. Who's to say? There's always Jim Cramer's. There's a bull market somewhere. Man, this is just the leaves. Cisco, come on, guy. Yeah, you gotta just kind of work your way through these things. 205, you son of a bitch. Good one. I was 209, but I think after fees, it was like right around 210, somewhere between 209 and 210. And I deuced out this morning at 260. Again, just the original investment, the profit I left in tokens. And I'm just using that to slowly build my position in optimism, which I think is going to be a really good one. But again, not advice. 221, still good. 217, good. 205 and 218. Okay. So what? An aggregate 12, 11, well, depending on how many. Good. Got some hypercycle at 19. Nice. You sold a put at 88. Oh, great. Yeah, that's easy money. I made a lot of money selling cash secured puts. I mean, although it's weird because it settles in Bitcoin, but are you using the USDC settled? Robert, are you using the USDC settled markets? Because I think I saw that. It's either USDC or USDT. They have that now. When I was trading Deribit a few years ago, it was everything settled in Bitcoin, which was weird, because when you're selling puts against Bitcoin in terms of Bitcoin, and then you get paid in Bitcoin. But if the asset's going down, you get paid an asset that's dropping in value. I wasn't a big fan of that. I wanted some kind of stablecoin equivalent markets. Hopefully that's more fully formed. Optimism 212. Gas prices have been high, but not too high to trade on an exchange. Gas prices wouldn't have affected a trade either on Coinbase or Kraken or whatever your chosen preferred centralized exchange is. 100% invested, that's fine. Listen, you don't have to. No one has to take advantage of these things. But you can take advantage of these things, and these kinds of little moves and arbitrage opportunities and that's less common now, obviously, but. Well, we're certainly doing intellectual arbitrage, aren't we? Like all the time. But I would say that this is what kind of propped me up, but this is what let me grow my portfolio during 2018, 2019, early part of 2020, and then late 22 as everything was crashing because Bankman Fried Chicken shit the bed, Alameda shit the bed, Luna disintegrated, Celsius disintegrated, Three Arrows disintegrated, and all of the douchebag hedge funds that were pumping and promoting all of those, they got waxed. Only, unfortunately, some of them are still in business, like Galaxy, but whatever. Anyway, taking advantage of these opportunities let me add 1% here, 2% there, 0.5% here and there. And if you're growing if you have a portfolio that has the potential to do a 10x, I know that, and again, that's a ridiculous thing, 10,000%. Oh, crazy! That's crazy talk. We talk about single-digit percentages in this office, but if you do have a portfolio that could do 1,000% over time, let's say over 5 years, which is not unheard of in crypto. That could be 2 years in crypto or a year in crypto. Then a percent here and a percent there, or 0.5% here or there, makes a big difference. So again, I'm not encouraging anyone to trade. I am encouraging you to take advantage of opportunities. If there is a huge retracement in the market and the information has not changed, then the information has not changed. Understand what a technical route looks, a technical ass whooping looks like from, some kind of change, an actual like cyclical change or some permanent secular change, right? Like, okay, you expected the pullback, or you wanted a bigger pullback? I haven't even checked prices. Why don't we jump over to prices, continue this conversation? I'll talk about Bitwise. CEO's got some interesting comments. Okie dokie. Oh, wait. I gotta put my cool music on. My cool markets music. What? Yeah, I got music. I got music for days. Okay, let's talk Bitwise for a second. We don't need to talk about CPI. We already nailed that. Okay. So some of his thoughts are Bitcoin going to 200,000. So Bitwise Asset Management released their 10 crypto predictions for 2025. They believe major cryptocurrencies will likely make new all-time highs in 2025 in this report. I'm not going to go through the report, but I'll read some bullets. Among other predictions, they believe the number of nations holding crypto assets are likely to double, and 5 crypto companies could launch U.S. IPOs. I think Kraken is very likely to IPO and some things like that. So this stuff is bullshit. I had seen someone pitching some carbon credit type bullshitty stuff a while back. Remember, that's what Cogito was originally going to be, is like stable coins based on the melting of glaciers and just all this old stupid shit. Of course, they pivoted 17 times since then. They've changed the company over and over and over and over and over because they have no effing clue what they're doing. And that's fine. They're a bunch of bankers that are masquerading as crypto people with a bunch of AI people that are masquerading as crypto people, telling them how to be in crypto. And none of that fucking group knows what they're doing. And this is why they have a 3-cent asset and no clue how to move forward. But the whole climate changey thing, I get it. It's kind of like, to me, in my mind, I group it with if someone came to me with a diversity token. You'd be like, okay, cool. I get what you're doing. I support the emotion of what you're doing. I like diversity. I like the idea of it. I like non-persecution, but it doesn't make sense as a financial asset. And this is that. I think the carbon credit thing is mostly bullshit anyway. The fact that a company can pour fucking poison into the atmosphere and pay and go buy carbon credits from some company that has trees or something, and they just put off like oxygen. So these guys, this little company sells their carbon credits to this other company that's just shitting into the atmosphere so that we can breathe it. To me, that feels a little sketch. Like, how do you buy your way out of good behavior? Well, I guess that's how. So this whole carbon credit thing is a little sketch to me. I think it's being perverted. There are carbon credit traders that make a lot of money, but that whole market's very perverse. And I would also say, is probably got a lot of regulatory eyeballs on it. So for me, the climate change tokens and all that kind of shit, because usually crypto is where the sketchiest of the sketch come to pilfer the dumbest of the dumb. However, on the other side of it, people that are trading and investing in the crypto space have a lot of fire in the gut, intestinal fortitude, brass genitals, whatever you want to call it. Tether just minted another. Of course they did. Of course they did. Because the wheels are off for Tether. There's no Tether is untethered. All right. So let's talk about Bitwise. So with the highly successful introduction of spot Bitcoin exchange traded funds, the U.S. crypto regulatory situation is now looking a lot rosier than before. Could you guys imagine this run having manifested if Comrade Kamala was in charge? I don't know. Maybe. I don't think so. Anyway, so things look rosier. The orange man is back. He'll be elected for a second term, and people have been pretty happy about that. I think, well, the end of 2024, as we're in it, has been pretty good. I think 2025, it won't be without volatility, but it's going to be a good one. According to Bitwise Asset Management, which is kind of cool. Bam! What do you work for? Bam! Whoa. Whoa. A firm which specializes in developing crypto investment products. I hate when they just say crypto. Crypto sounds bad. It sounds like the crypt keeper, right? Like, people hear crypto, they don't think cryptographically secured assets. They don't think encryption. I think of like that guy with the the guy that and he comes out of the coffin, that guy. Anyway, whatever. These guys at Bitwise laid out 10 predictions for the year to come in a report released yesterday, and this was done by the firm's chief investment officer, Matt Hugin. He and the head of research, Ryan Rasmussen. First, in their predictions, they believe that cryptocurrencies in general will see just record highs. Now, that's not every asset, but that's what they're saying. Okay, great guess with Bitcoin pretty much at or around the all-time highs. That's a pretty easy one, but they believe Bitcoin will push 200,000 a coin, while Ether will hit 7,000, and they believe Solana will surpass 750. Maybe if YOLO meme coin, if that whole meme coin society keeps gambling the way they gamble, the gambling kind of place of choice is Solana. So I guess it makes sense. I don't know if that's the case. I don't know if there's enough money sloshing around in there to get them to 750 to get Solana a triple, but maybe. Bitcoin's rise, they believe, will be fueled by bigger ETF inflows, much bigger than 2024. I would agree. This sentiment is given based on their success already, but the team noted that it's not unusual for ETFs to take in larger flows in year 2 versus year 1. They also remind that major wirehouses are only now finishing up their due diligence on the products, and investors are feeling more comfortable increasing their exposure to Bitcoin. The more they hear about it, the less weird it becomes. The more it ends up in people's portfolios, again, the less weird it becomes. There is a possibility that the U.S. Department of Labor won't be so adversarial towards the sector anymore. I don't know if you would say the Department of Labor. I would say Department of Justice and the executive branch. And, oh yeah, the entire legacy banking system. Tales from the Crypt Keeper. Yes. My buddy actually built the Crypt. He's an actor, Michael Cudlitz. I don't know if you guys know him. He was Abraham in The Walking Dead. Anybody see The Walking Dead? Everybody saw The Walking Dead. You're a damn fool if you didn't watch The Walking Dead. Anyway, he's a buddy of mine. And he was also in Southland, where he crushed it. Really good. Anyway, he built that. That was like one of his. He was like a carpenter and stuff. like Jesus, maybe, but Jesus never built a crypt keeper. Okay, so they believe big ETF inflows, so that would be pointed towards Bitcoin and Ethereum. All right. They believe that there could be a potential Bitcoin arms race. What does that mean? I don't know. I can't walk that fast on my arms, so I would be bad in an arms race. You're welcome. They believe this will be kicked off by U.S. politicians' plans to constitute a strategic Bitcoin reserve, both on the state level and on the government level. So you guys know there's 10 or 11 states right now that are planning. They're in the various stages, this iterative process of proposing or rolling out Bitcoin strategic reserves for the states. You know, your Floridas and your things like that. I think this will probably, I don't know if this would force the U.S. into doing it. I know that Cynthia Loomis has put forward some proposals, things like that. I don't know if that's something that could win just yet. This idea that the U.S. would buy 1 million Bitcoin over 5 years, and which that would be big. But as more states do this, it becomes less of a weirdness, right? It becomes less weird. And so then it would be easier for senators and congressmen in, all around the country to go, okay, I guess I'd be okay with something like this. And so I think that's going to happen more and more. I would be surprised if there isn't at least 20 in the United States that hold Bitcoin to some degree by the end of 2025. That's just me. These guys think that not only will the number of states increase, but the U.S. government will participate. That will create government level FOMO, political FOMO, and that the number of countries holding Bitcoin will double in 2025 from currently 9 to 18. And that could cause some central bank FOMO and what have you. Other possibilities for 2025. Stable coins will benefit from clear legislation in the US and fintech integrations, as well as rising prices, doubling their market caps to around 400 billion. Well, Tether doesn't need to wait for regulation or legislation. They can just create it out of thin air. There's nothing there, so just call the guys at Tether, you guys. Anyway, tokenized real world assets, the current bullshit term to mean stuff. But since RWA has people have only been saying RWAs for a year or two now. So, it's new. RWAs. Shit, I want in on that. Oh yeah? Yeah, you want that? Okay. Good job. Welcome. Wow, you're on the bleeding edge. Anyway, they believe that this RWA space will shoot past 50 billion. That's dust. To be honest, that's really kind of dust, but whatever. I don't think that's a big, that's not like a big guess or gamble, whatever. Okay. Another, they think the meme coin mania is going to continue. They think even more people are going to be spamming their way in. They think a lot of AI agents are going to be used to make it easier to launch tokens. And every news event, important or otherwise, is going to have a token launch. People are going to spam gamble on it. It's turning out to be like mini lotteries. Everybody's just giving their money to one person or two people over and over and over. It's kind of like, okay, good luck, everyone. People win lotteries, but don't win the lottery and then go get financial advice. Come on, right? What would I like to see backing stablecoins? I would like to see cash or cash equivalents. And to me, short-term, short-dated, on-the-run treasuries. That's it. Short-term, short-run, short-term, on-the-run, highly liquid, AAA, pristine collateral, or cash equivalent, or cash. That's it. Nothing else. not fucking real estate, not bridge tokens in Des Moines, not, pipeline farms in Scandinavia, not all these weird corporate bonds, and come on, man. Not a bunch of junk bullshit. On the run treasuries or cash, or don't manage a fucking stablecoin company, because it all becomes a printing exercise, a Ponzi. Not even a Ponzi. It's a counterfeiting operation. It's a wildcat bank. So, Tether's gotten away with it. We'll see if people start getting indicted or not, but my guess is they'll just let them keep running their scam, because that's what governments do, and no one seems to have a problem with that. This is why I like Bitcoin so much. Why? Because it's a hedge against the stupidity that is everywhere. I mean, God, every time I was at a thing yesterday, kind of an event, it was cool, kind of meeting different people from different walks of life, and I was talking to one guy, and I said, I used to go into these rooms with these money managers and stuff like that, and I said, okay, go into every room pretending you're the dumbest guy in the room, and then you have something to learn, and keep your glass should be philosophically half empty, right? So you can absorb and kind of learn. And I always left worried that anybody I knew might be having their money managed by these guys. I used to consult over at Liberty Mutual, and what do they have? 300 billion under management, 350 billion under management. I've never met a bigger group of jackasses. I mean, just don't get it, no clue, salesmen, senior citizen gouging douchebags that have no fucking clue what they're doing. None. And if you and this extrapolates far and wide. In finance, you go in on the ground floor, you learn a core set of skills, you may or may not employ them, but it's probably going to be pushing you into a sales job. You're going to sell other people on the fact that your company can do all these things that you don't really understand. You don't need to, because your job is a sales job. You're not really an analyst. But you're just pushing the line that you got fed in the morning. This is what we're selling. This is what we're doing. This is where it's at. So, and you graduate now. Oh, you get a promotion. Now you're in charge of some other salespeople. Okay, you have some sales goals, but really, let's keep these guys in line. Let's make sure everyone's selling. Always be selling. Always be selling, always be closing, ABC. Pretty soon, now you're in charge of other managers. Now you're a VP. You got all these managers, and they manage all these people. You ain't selling nothing. You're managing people. Then you're a C-suite executive. Now you're managing VPs, managing people, managing new hires. At no time in that do you have any actual skill. You don't know what the fuck you're looking at. Someone shows you a yield curve and you're like, what? I don't understand. Is that a slow motion picture of people playing hopscotch? What is that? You don't know. And why would you? Because you manage people and you're a salesman. And this is finance. This is finance, man. When you look under the skirt, it's nothing. It's a Barbie doll. Nothing. Same as a Ken doll. Nothing going on. No big surprise. And that is unfortunately the state of legacy finance. That's why they're so averse to all of this change. Because one, they don't understand what it is, and they realize how replaceable they are. So I don't know. They would probably realize a bunch of things, or maybe they don't. Maybe they just don't know what's going on and they don't realize any of this stuff. Anyway, continuing, crypto companies will have a good year. Bitwise has predicted that a host of them would launch IPOs. Bitwise said stablecoin issuer Circle, crypto lending firm Figure, on-chain data company Chainalysis, crypto exchange Kraken, and crypto custodian Anchorage Digital are the most likely to go public. I don't know. Would I buy Kraken? Would I buy Kraken? Depends on how they value it. I mean, you did pretty good if you participated in Coinbase. You did dang good. Anyway, already public for several years, crypto exchange Coinbase could see its stock up to 700 or more per share, more than a double from the current level. Bitwise said, "This ain't me, man. This is Bitwise," meaning it would surpass Charles Schwab as the most valuable brokerage in the world. Think about that for a second. Think about that. Think about that. Coinbase has a chance to become the most valuable brokerage on earth. What a big FU that is to legacy finance. Just a big, right? Just right down the pipe. Further, they suggest it could mean that Coinbase could be included in the S&P 500, coupled with Microsaylor, his likely inclusion into the NASDAQ 100. There's a chance that almost every U.S. investor will have exposure to crypto assets through these vehicles. So, right, because remember, when you get in the NASDAQ 100 and the S&P 500, guess what you're a part of? Index funds. And then what happens? Passive indexation. Every dollar that goes in, some of that's going to you, because that's how passive indexation works. Here's my investment dollar, you take it and you distribute it in your chosen assets. That's how she be. So that's kind of interesting. Obviously, just a real quick note on markets. Pretty good little bounce back. Let's see. Are any of them giving up the ghost? A little bit, but everything is still looking pretty good. I mean, we were just near, within just like spitting distance of an all-time high in Bitcoin. Let's see. Look where we got 102.4. It's pretty close. Pretty close. Where else? Let's look at where some excitement is. Sui is crushing it. It was either this morning or last night. It touched an all-time high. I don't think you want to bet against that right now. It's the one that all the spammy douchebags are pumping. So that's funny. That is funny. So yeah, I wouldn't be betting against that right now. Don't go against the don't go against the VC crypto bros, because they pump out to a bunch of idiots like the Raoul Pals of the world and stuff. They have all their idiots on their little platform that just devour everything they say. They just fucking drink it up. Don't try to fight that. There may be dummies, but those are dummies with a lot of money. This is like the next level up. This is like if all those spammy meme coin trader Uber drivers and bartenders, if they were, if they had an extra 200K in their back pocket, they would be Raoul's listeners. And those people act. They don't know why they act. They're bleary-eyed and mostly deluded by all of the bullshit that they hear, but they act. They make purchases a lot. So they're pumping Sui. Follow Sui. If Sui pumps, what is likely to follow? Aptos is likely to follow. Why? It's the same it's the same DNA. It's the Move blockchain. Comes from the original when Facebook, before they were Meta, had the DM stablecoin project. Moshe and those guys burnt off, did their own thing, because that obviously got killed and mired in regulatory, mud. And so the Maxine Waters and the Elizabeth Warrens of the world and the Brad Shermans all shit all over that. And so here we are a few years later and everything's way better. But Aptos is another one where I wouldn't be betting against it. Just be careful. VeChain having a pretty good little run. Filecoin almost back to 7. I think it almost touched 8 about a week ago, right? Let's look. Look at the 7-day. I think it was. Oh yeah. It was in the 8s. 824. So it held in the 8s for a few days before it, obviously over the weekend shit the bed. Look at all of that volume. Look at all that sales volume. I'm out. Why, bro? Why? Because look at the 90-day. Don't panic here, guy. You started here, guy. Anyway, whatever. Panicker is going to panic, right? Optimism, not a bad day, up 11.4. What did it top out today at? 60 something? 72. Nikes. And then back up to, well, it must have been 60 earlier. Let me pop this up. Hold on. This was this morning, so it got 266. Then it's kind of so look at, that's a lot of volume. God, these things are just rocking. Anyway, this is what a little bull market looks like. Say this is a knockoff, kind of a, I don't know. It's a knockoff of Sui. But I've started to see people on FinTwit start pumping it. Jupiter has had a nice run. Remember, there's some things. If you didn't catch yesterday's show, go back and watch yesterday's show. We talked a lot about some decisions to maybe make for Jupiter going into the new year. And we have a slight adjustment on that we'll talk about tomorrow. If someone reminds me, it's not what we'll do with Jupiter, but it's what we be transitioning into from Jupiter, pending some situations that are coming over the next 6 weeks. So, yes, that we should probably address tomorrow. Other than that, I thought it was interesting. Look how well Harmony 1 has been doing. Again, it's a layer 2 of Ethereum, but it's kind of mostly overlooked. It's kind of interesting. Hypercycle, some selling today. Oof. You usually can trace this to one or two people. See this? My guess is it's not even that much volume. Let's go look. Where did all this occur? Yeah, this is a few people swapping out. These are people, by the way, that are just, if you want to be honest, they're just trying to do damage to the ecosystem because they could sell those tokens OTC and there would be zero drop in price. Zero. The fact that they're doing this tells you that they're willing to lose money. They're willing to lose money to hurt the token. And those of you filling licenses should be like, thank you, you jackass. So I say, listen, if you want to sell something, I don't ever get mad at someone for selling. You want to sell something, sell your shit and move on. I don't care. There's enough meat on the bone for everybody here. Look, Crapgito having a nice little day, up 19%. Why? Spam. Let's go look at that. Let's go. It won't take long to figure this out. Oh, let's see. 66,000 at Gate, nothing. 128,000 on Pancake Swap. So what does that mean? That means that this shit show dumpster fire of an asset is being bullied around by people that are, I don't know, probably trying to push the price so they can, I don't know, price it for the merger with Singularity DAO. I don't know, just throwing stuff out there. Does this price action look organic to you? Oh yeah, woo! Oh, because Donald Trump. Yeah, real world assets, Cogito. Yeah, Donald Trump. Oh really? But that was over here. The Donald Trump thing was. We can go back. That was here. So where's the? No, sorry. That was here. Yeah, Donald Trump. Yeah, Cogito. No, not really interested. Nope. Oh, wow. Whoa, weird that at the same time that Singularity DAO is doing their reverse mergery bullshitty layer 2 rollout fucking spam project, SFI. Weird that at the same time, this token of all tokens, this one that no one fucking knows what it is going straight up. It's crazy. It's crazy, right? I mean, I guess it's just a coincidence. Bunch of fucking clowns. Anyway, be careful. There's more scumbags per square foot in the crypto space than anywhere else on earth, I think. I do think that Ethereum, unrelated, I think Ethereum got close to 4K today. Let's see. 39.85. It was 39.70. So even just a few minutes ago. So the fact that it's holding these 39 is pretty good. I think it probably does pierce this year. I think in 2025, we probably get, I don't know. We probably get for 4,200, 4,400. I don't know if we hit all-time highs, but that's something that would look a lot more likely rolling into like inauguration time and stuff like that. So anyway, there you go. Let's see. Do I see a $60 Filecoin? I'm going to answer this because this is a theoretical question, not an investment question. No, I do not. And the reason I do not is because I don't know that Filecoin, at least the way it's discussed right now, has enough interest. I mean, could anything happen? Anything could happen. I mean, the fact that Dogecoin is not 0.0000001 means that anything can happen. But some things are not likely to happen. I don't know that a $40 billion market cap for Filecoin makes sense. I don't know if that makes sense. Again, it's one of those situations where Filecoin is extremely effective at doing what it does. It's got great partnerships. It actually has a lot of utility. People use Filecoin. They use it a lot. Great. But it's efficient and relatively low cost. And I don't know if it would be as efficient and relatively low cost at $60 a token. Because remember, Filecoin is the commerce token in the ecosystem. So I don't know if that makes sense to me. There may be a bit of a jam up with the value you receive versus the cost. There may be some equilibrium price, I guess, and I don't think 60 is it. Are the hypercycle trolls part of Singularity DAO? And yes. Okay, what would you suggest to do if I'm interested in a masternode? I find it very difficult to purchase that many tokens. Well, then don't. You don't need to get a masternode. Do what you can afford. Everybody here should live within their budget. Live within your investment budget. Don't just do something because you got your mindset on it. Like, I must have a masternode. I must have 524,288 tokens. Oh. Build your way up. All right, let's switch gears. Let's do some brain stuff now. Let's kind of get more theoretical. We try to do this every Tuesdays and Thursdays, is where we really try to focus on our brains and good kind of thinking. We spend some time thinking about thinking. So let's think about that. And we're going to talk about seizing opportunities in bear markets and also thriving in bull markets when there are retracements like what just happened, and making the best out of it.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
All right, let me go here. Why don't we? Did we like chill vibes? Yeah, you can think. You can think with some chill vibes going on. Let me get this banner adjusted here. I don't think we need this. I think the discussion will speak for itself. So we are going to focus on today seizing opportunity in bear market environments. Let me turn the music down just a hair. I feel like it's a little robust. Muy ruido. Okay. I kind of look at it like this. In your crypto journey, you're educating yourself. And when you first put money into the market, you're graduating. And just real quick, am I accumulating? I am accumulating tokens. I do a little bit of market making. I'm not merging tokens right now. I'm kind of just accumulating. And I also am waiting for, although there's no reason to do this, I probably should be merging more so that I can get the rewards over at Node Market for having node factories. So actually, I will probably give that some consideration. I have a little stockpile. It might be time to do some merging. I just hate the Ethereum fees being high. That's really it. I'm just a cheapskate. If you want to be, if we're being honest, I'm just a cheapskate. Anyway, yes, I should be doing that, and I should be collecting the rewards on Node Market. All right, but let's think about, like, as you educate yourself, No, I don't trade hypercycle. Hypercycle is a business investment for me. I don't think of it as a trade. There probably is a trade on it, but that's not. I don't even want to speculate on that in this forum. We could talk about that tomorrow. There probably is a trade in there for mid next year. Anyway, so as you go out into the investment side of the crypto space, many of you are already invested. I get it. Some of you are fringe investing. Some of you are just dipping your toe in the water. Some of you have been here a long time. Some of you have been here 2 or 3 up and down markets. But intellectually, you will kind of graduate to a level where you're a competent investor, right? I'm not going to say competent trader because there's a fair amount of luck involved in trading, but a competent investor. You know how to look at an asset, analyze it, and you know how to come, at least to make a value proposition for yourself that you think this thing that passes muster, that can achieve use utility, wide scale adoption, and may create the hoarding effect so that you can benefit from it as an early investor. So we're going to discuss recognizing opportunity in bear markets, taking advantage of pullbacks during bull markets, and developing resilience to invest in high quality assets. And so this is kind of critical or pragmatic thinking, but mostly critical thinking skills, game theoretical, being aware of your cognitive biases, and just an overall kind of intellectual understanding of what you're trying to accomplish. Basically, get out of your own way. And that's kind of part of your education too, is like fighting against your own innate urges and biases and doing what is pragmatic or game theoretically, algebraically correct, right? Algebraic integrity. So before diving into bear and bull markets, let's clarify kind of what that means. A bear market is, for us, when prices of assets like stock or crypto or whatever fall by 20% or more from recent highs, often accompanied by sustained periods of fear and pessimism. In the crypto space, 20% is a weekend. It doesn't mean shit, but 20% in equities would be chaos, like streets on fire, dystopian goddamn nightmare. A bear market in crypto, to me, is 50% or better. A bear market, a little pullback, 20%, 18, 15. We just saw that and nothing changed. So, maybe adjust the points up a little higher for versus an equity bear market. A bull market is when prices are on the aggregate rising. Optimism is good, but people are very optimistic and they're talking things up and it's exciting and yay, we're going to win. Investments are looking unstoppable. This time is different. The same kind of thing you hear every time, only it's kind of right. Every bull market, every bear market, they are all structurally a little different, but humans are not. Humans are pretty much the same. So there are you can make a lot of money because humans are cyclical creatures. So market cycles are very natural. Financial markets move in cycles. Bull markets don't last forever. Neither do bear markets, as we just saw, right? So recognizing the inevitability in these kind of cyclic behavior allows you to approach investments with a much more like level, non-emotional brain, right? So you want to focus on quality over hype. So in a bear market, it's easy to get swept up in panic, especially selling like your high quality assets at a discount because you think it's over, because you listen to other people that may have made bad decisions or that are generally pessimistic or that got left behind, whatever. And instead of kind of falling into those narratives, you focus on the companies, the projects, assets with strong fundamentals. Do they generate cash flow? Well, right now in the crypto space, just about nothing generates cash flow. A few companies do. I like those companies, but most do not. do they have the companies that can generate some consistent cash flow? Do they have any competitive advantage? Do they have strong branding? Do they have a technology advantage? Do they have any IP that's locked up that can't just be copy and pasted? Mostly the answer is no, but occasionally the answer is yes. Are these projects managed by competent leadership? Well, you realize when you're looking at all this, like, oh wait, we have the 5 T's: team, timing, technology, right? Right there, you have like super important. Matter of fact, it's so important, we should put the banner up. You have your 5 T's. That's the way you find that your first basic fundamental value proposition. Team, timing, technology, look at the tokenomics, and then the token. Why does this token exist in the first place? Why token? That's the only thing Michael Turpin said that I ever really liked. He said, why token? So the bitch was right. Everything else he's done is kind of scammy, but whatever. So yes, you do your 5 T's. Then, I mean, obviously, buy an asset, sell it for more currency units, right? It's kind of a dumb, simple rule. Buy low, sell high. The other thing is you can sell high and buy low and sell high again. You can short assets, you can sell puts. There's all sorts of ways to take your thesis about these markets, which is everybody's got their own thoughts, to take your thesis about this market and express it in a variety of trades and investments. And that's what gets so fun, is the way that you articulate your thoughts into investment ideas and then follow through with them. So the simplest but hardest to follow is, in a bear market, assets are cheap. They are cheap. So if you have discipline to buy when other people are fearful and are selling, then you win, because you can position yourself for huge rewards. Money's made in bear markets. You actually realize the gains, actually book the profits in bull markets. But the money's made when you buy. Same thing in real estate, right? It's how you buy it. So let's look at the game theory side of that. Game theory obviously helps us understand decision-making in environments where outcomes depend on the actions of others, the other participants in the market, right? So in financial markets, the actions of millions of investors create trends, fads, booms, also crashes, right? So how the game theory applies is, there's a little prisoner's dilemma in here, herd behavior. There's a little timing and strategy, right? Anticipating people's moves. And then there's the long game, which is the iterative play. So, and hopefully we're all doing kind of a mix, a mishmash of all of this, or at least we're paying attention to it. In a bear market, everyone's instinct, for the most part, is to sell and protect their money, clutch their pearls. And this leads to a downward spiral of falling prices because there's less people buying because they're panicky, and then the people sell, and then there's more sellers, and people that had leverage, they got to sell, and people that borrow money, they got to sell. Everybody got to sell. Everybody got to sell. But a rational strategy is to do the opposite. If everyone is selling, prices go into a point where you might consider them undervalued. I say you because you have to determine what is valuable to you. So a lot of opportunities created during these pullbacks and bear markets in general. By buying quality assets during panic, you position yourself to make huge gains when the recovery occurs. From last week, from Sunday until last night, I probably put an extra 100 racks in my pocket. Minimum. Because anyway, it doesn't matter. The point is, that's money that was just sitting there. It's dummy panic money. The universe gave me 100 grand because fucking dummies got over leveraged, over their skis, and panicked. But the information didn't change. The value proposition of these assets didn't change. Nothing changed, except that a bunch of dummies dummied, which dummies do, and many of us took advantage of it. Not everybody, because some of you were like, oh crap, it's over. The bear market's gone. I mean, the bear market's here again. It's over. The Trump trade and all this kind of shit. You can't. It has to be. You have to stick with your 5 T's. You have to stick with. If the story hasn't changed, and it's only technical changes, then you stay the course, right? Again, if you can't sleep at night, you do whatever it takes to sleep at night. I'm not telling anybody to stay in an investment that scares them, but you shouldn't be making investments if any of this stuff scares you, because you're over invested. If you get sad when the market is down and happy when the market is up, you're probably over invested. Probably by a lot. Anyway, continuing. In both bear and bull markets, timing is super, super important. And game theory obviously keeps us a little bit ahead of that. Why? So in game theory, we're looking at the strategic interactions, interdependencies between players in a game, in a scenario, right? So what are other people likely to do in response to current conditions? As game theory teaches us, we're thinking about the future right now. We're living in our minds 6, 8, 12, 18 months into the future. So for us, we're trying to imagine the world that people have not had to contend with yet. And we're trying to front run group thinking. So, and by doing that, we put ourselves in a position to benefit from their actions. Once the lazy, unwashed masses come to these conclusions that we thought of 18 months ago, they come and, you know what? We sell them our bags because now they find value in it. They've done probably no teas. They don't have really any system other than following the pack. And we front run group think and we win. And right, like what do we say? You can either be really good at something, you can be lucky, which isn't a strategy, you can cheat, or you can be first. Being first is the easiest one of those options. So when you see these bull market pullbacks and a bunch of investors start to panic, like I know when to buy when people start calling me and they're like, hey, is it over? I'm like, hold on a second. Let me put you on hold. Boop. Purchase, limit order, buy. Oh no, hold on just a second. Buy. Yeah. I don't know, man. I think it could be over. Like, come on, man. So a game theory mindset encourages you to ask, is this temporary? Are other people overreacting? Has the information actually changed? Mostly these answers will point to, at least in a bear market scenario, a bear market scenario is a pullback could last longer. A bull market scenario is a pullback is more temporary, right? So you know that if things are mostly going up and to the right, then if things are going up and to the right for the most part, and there's no real big headwinds, then any pullbacks are likely temporary. And so you look around and you check the news and you make sure, okay, did I miss something? Did something big happen? If not, I want back in. I want to take advantage of this. So you buy the dip. And that gets us to that kind of long game iterative play, which is markets are not one moment. They're not a single game. They're an ongoing series of opportunities. So some of you, I'll read some of the comments. You're like, well, it's like, I don't have enough money to do this or that. Buddy, I started my crypto investments. I had a lot of money in gold and silver. I started it with less than 10K, less than $10,000. I believed in it. I just didn't believe in it that much. Now, obviously that was $10,000 many years ago, which bought a lot more stuff. It bought a lot more stuff. I'll just leave it at that. But it's still the same. I didn't start with like Superman money. So if you make continual good choices, and you have a couple little short-term losses, it's not the end of the story. If you focus on the longer term, consistently making logical, informed, game theoretical decisions, you will maximize your chances of winning overall, because remember who you're competing with. A bunch of morons. It is what it is. A bunch of jackasses. They're just trying to maximize they're optimizing their photo on Instagram for whatever reason, and you're optimizing your future by expanding your portfolio. Those are distinctly different lines of reasoning and thought. So you have to overcome your cognitive biases. The best game theory in the world, it doesn't have efficacy if your cognitive biases are choking out all of your good decision making. So even the smartest investors will fall victim to cognitive bias, right? These kind of mental shortcuts that lead to poor decision making. Three of the most common ones out there are loss aversion, herd mentality, and overconfidence bias. Like overconfidence in bear markets and in bull markets, but mostly in bull markets. So first, let's talk loss aversion. People fear loss more than they value gain, right? Just emotionally, emotion points. A win is like a +1. A loss is a -3. Ugh. Right? That's painful. Some painful shit. In a bear market, this bias, this kind of loss aversion bias can make you very hesitant to invest because you stop thinking about the long term. And even when assets are at bargain prices, you still hesitate to invest. And how you steer yourself around that is you reframe your mindset. Instead of fearing losses, focus on the potential for long-term gains. What I'll do is when we hit a bull market top, I continually ask myself during market downturns, are we ever going back to that point? If I'm confident that we are, I have a cheat sheet. The universe gave me a cheat sheet. Let's see, all this new money coming into crypto, governments, states, pension funds, hedge funds, ETF, Hong Kong, China, Russia, Bitcoin reserves, all this kind of stuff. Is Bitcoin going to ever get back to 69,000? Yeah. Like, obviously. Is it ever going to get back to 103? Yes. Like, so when you have a cheat sheet, the universe gave you a cheat sheet. Now, if you look and say, well, the information's changed and maybe this is the local top. Okay. So start reprogramming your mind for like a bear market psychology, but you still buy things with dollar cost average strategies over time, kind of in line with your value proposition of that asset, but you have a cheat sheet. You already saw all these prices. And if you ever think the market will go above and beyond where it was, there's free money waiting for you. Free. 1, 2, free. Right? Set your limit, again, position limits, be smart, but there really is a lot of free money just waiting there. But it takes getting beat up a few times to kind of like, oh, I guess I should keep my hands up, right? So anyway, when everyone else is typically selling in a bear market or when they're all buying in a bull market, it's tempting to follow that. Like, oh shit, they're all doing it. Must be right. No, ask yourself, am I acting out of emotion or am I being logical? Stick to your strategy, not the crowds. The crowds are mostly wrong. Crowds are mostly stupid. Crowd IQ drops. That's it. And then finally, I would say that don't have overconfidence in bull markets either, right? Success in a bull market can lead to overconfidence, causing you to ignore risks. I don't mean that to think, oh, well, the bull market could go on forever. I'm not talking about that. I'm talking about you have some winning plays and therefore you think you have the hot hand and that everything you touch must go up. It must do whatever it must do. Things don't just go up and they don't just go down. Some things do just go down, but things don't just go up. But on the aggregate, they may continue to melt up. Is Bitcoin going to go up? Yes. Is it going to go down? Yes. Is it going to be volatile? Yep. Is the path probably slowly up and to the right? Yes. Are there other opportunities where you can make more? Yes. Are they more dangerous? Absolutely. Welcome to crypto, where you're going to, the first couple years in crypto, you will throw up all the time. Good for you. Has anybody actually thrown up looking at their portfolio? I guess you would throw up in a good way. I don't even know what that would look like, but I'd drink it back down, chunks and all. So assess the fundamentals of your investments and remind yourself that no market goes up forever. Even in a bull market, the line is not straight up and to the right. It's a wobbly ass line, right? It's like your meth-riddled grandmother's EKG. It might still be going up, but it's a crazy path on the way there. So just be careful. So stick to your principles, right? Come up with like a checklist of qualities that you seek in investments. For me, it's the 5 T's. During bear markets, use this list to stay focused on value rather than fear. When there are pullbacks in the market, you have a crystal ball. You know where prices were. If you believe prices will ever get back there, then the decision is, how much reinvestment capital do you have so that you're not all giving it back. Investing is it is a marathon. I don't like that phrase, but it's a marathon. It's not even a marathon. It's just like you start running and you never ever stop. You will never stop investing ever, because governments will keep printing, and as long as governments keep printing, your ass better be investing, because that's who you're fighting. You're fighting every government on earth, lending into existence, creating cash into existence, robbing from next year to finance right now into existence, cash, credit availability that shouldn't exist, $36 trillion and counting, $150 trillion in unfunded liabilities and other more grotesque bullshit that we can't even see. Like, that's who you're fighting against. These mofos will print into existence everything. You think Tether is bad? At least Tether tells us they're doing it. Everyone else just does it. Every other country does it. Banks do it. They all do it. And so that's why these things make sense. That's why Bitcoin as a hedge against stupidity makes sense. Stupidity is not going to stop. I don't think ever, until AI takes over, until HEI takes over. I don't know when that is. Yeah. Anyway, bear markets are not forever. They might last a few months or even a few years, but they create a lot of opportunity to buy really quality assets at a really good discount. The rewards come to those who wait. Be somewhat diversified, right? Don't be all in one asset. Spread your investments out. But I guess if you were going to be an all in one asset, I guess you could do worse than Bitcoin, right? So, but I would say spread your investments across some different asset classes, industries, geographies. And if you want to stay specifically crypto, which I am, create in your mind sectors in the crypto space, and then be distributed in that kind of smattering of assets that fall into categories: layer ones, layer twos, store of value, data plays, AI plays, things like that. Find some way in your mind that you can kind of compartmentalize all those things and get some sector diversity. And then also understand that, markets are very complex. Your education never stops. It is continuing. You will always be learning new things, studying economic cycles, reading about other people that have had success in investing, trying to figure out why. You're going to hear a lot of noise. Learn how to tune out the noise. And finally, for those of you that have experienced some success, win quietly. Win, not W-E-N, not win, not W-H-E-N, win, W-I-N. You need to win quietly. A lot of people will cheer you on until you find some level of success, and then they fucking hate you. It is what it is. Humans they're weird that way. Win quietly. It's nobody else's business how good you're winning. No one wants to hear it. And you know what? People actually get some kind of weird, perverse pleasure when you lose. So don't share with them the downtimes. Be very careful about how you share with anyone the good times. It should be enough that you and the people around you, your lives have been improved by the work that you're doing, right? Like, you're the lifeboat, you saved everyone on the boat. Yay, everyone gets to live. Are you going to get much credit? No, you did it. But you're not doing this for credit. You're doing this for money. So keep it in perspective. Make your life materially better and win quietly. On that note, stay in school, don't do drugs, don't do anything. My poor insolvent drunk, struggling on meth grandmother, or Brandon wouldn't do. We'll see. We'll be back tomorrow with Brandon, 8 a.m. For those of you that get a chance, if you would be so kind, is to give a little tweet, a little twote. I don't think we can say twat because that's something else. give us a little tweet on this show if you guys can link it and put it out there. I'm curious to see what 140 of us, what the effect would be if we could grab a couple more participants to the show. More brains, more questions, more thoughts, good stuff. Anyway, see you guys tomorrow, and win quietly.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish.